introduction of a diverse array of financial technologies, including blockchain-enabled tokens and digital currencies, has been heralded for its ability to broaden markets and provide global inclusivity for countries with emerging markets. But how will these various new assets work with each other? I'd like to introduce our panel's moderator, Joyce Chang, who is the managing director and chair of global research at JP Morgan. Thank you very much.
Well, good afternoon, everyone, and what a pleasure to be back here for a second year. No one has to wear masks for this conferences, and what an amazing event and topics that are just so top of mind for all of us in the financial community today. It's just a true pleasure to be back here on this campus and to moderate the panel. And so maybe I can just say a few words on how we're seeing, fintech, crypto, and just the prospects. Well, if we had done this session a year ago and we asked everybody what was the top thing they were going to invest in, two answers really came up in all of the client surveys that I conducted. It was crypto and ESG. Well, so 3 weeks ago, at the investor event that I host annually in Washington, D.C., at the IMF World Bank meetings, I asked what will be the worst performing asset in 2023, and crypto came out number one. We asked people where they thought the price of Bitcoin would be in a year's time, and like we had that about 70% said it would be less than 25,000. So what a year of prospects. The market cap has gone from $3 trillion to $1 trillion, like a very, very sharp deceleration. And so this panel really will explore what are the lessons learned, what are the risks that lie ahead, what does this mean, for regulations, and what does it mean for emerging markets when we take a look at central bank digital currencies. But I would just say there's a couple of lessons that I would point out, and then I'm going to just take a moment to introduce our panelists who are joining us virtually and also here in person. Just amazing to be with Asha, who has, and I'm going to have to, ask her to hold it up, but who's just published an amazing new book, The Power of Capital, which I'm going to just encourage all of you to read. But Asha is somebody who has just been, a force in emerging markets for women in finance, and an amazing new book. And so just wonderful to be on stage with her. But what are some of the lessons that, I have learned from this crisis? Well, first, you need to separate the technology from the application. And there's three trends on technology that we think are still, going to be with us to stay, very important. That's, first of all, the tokenization of securities and of assets, the digital tokens, and how well it interacts with some of the traditional based systems. That's increasingly going to take priority. And I see that at JP Morgan, where we've been doing tokenization of assets. We just launched some of this in Singapore very recently. We were also looking at tokenized deposits. Are they going to need to be interest bearing with a slate of competitive products to attract deposits? And then there's tokenized assets that allow for fractional ownership and instant settlement. The second piece of technology that will continue to just gain more traction is smart contracts, programs that are stored on the blockchains that runs with predetermined conditions that are met, and they're expected to play a much larger role in the financial ecosystem. And some of the enhanced functionality that we're looking at includes the programmability, with self-executing smart contracts. And then finally, there's cryptography, which allows cryptocurrencies to complete anonymous, secure, and trustless transactions. And that's a powerful technology that can be leveraged by central banks to achieve a more efficient financial system. So a lot of technology that will be applied, but a lot of questions on regulation and whether you need central bank backing to establish trust in these instruments, given the volatility that we've seen. So let me just briefly introduce our panelists, and then I'm going to ask Asha to kick off this conversation. But it's just a true pleasure to be here on stage with Asha Mehta, who's managing partner and CIO at Delta, at Global Delta Capital, a specialist in emerging and frontier markets, and a sustainable lead investment fund. Wonderful to have online with us Mark Mobius, who's founding partner at Mobius Capital Partners, someone someone who I have followed for my whole career, sort of a father of emerging markets, Marcos Troyjo, the president at the New Development Bank. So more than just the crypto assets and fintech, I want these speakers to also bring their emerging markets background to bear, because it's been an incredibly challenging year for emerging markets, as you heard from the last panel, really caught in the middle between US and China tensions and record outflows this year that we think will reach $80 billion from emerging markets bonds, which was far more than what we saw in the global financial crisis. So Asha, if I could ask you to kick off this panel to talk about cryptocurrencies, but also just emerging markets more broadly and where you see it going after such a challenging year.
Is this better? Yeah. Joyce, thank you. Appreciate those kind words. And thank you all for having me here today. I'm delighted to be here. It's a gorgeous campus, my first time here. Beautiful day. And quite honestly, I cannot think of a better way to spend a Friday afternoon than talking about emerging markets, and specifically digital currencies and emerging markets, because I think it's a fascinating theme. Speaks to a lot of opportunity for global investors, let's call it over the next decade. To Joyce's point, it's been a challenging year for emerging markets. And until there's a significant catalyst, I don't know that we necessarily see a sharp reversion in the very near term. But I want to come back to that first, introduce myself a little bit more, and spend a few moments talking about digital currencies specifically. As Joyce said, I'm an investor in emerging markets. I, in my former role, ran about $25 billion in dedicated emerging markets equities, launched the first institutional frontier fund, the first active institutional emerging markets fossil fuel free fund, and actually was the first quantitative manager to sign the PRI. So what I'm building now, Global Delta Capital, which Joyce spoke about, really sits at the intersection of systematic finance, emerging markets, and brings to bear a sustainability lens. All of this is wrapped up in the themes that Joyce introduced: power of capital. Power of capital is really a walk around the globe. Starts in China, the hardest emerging market on earth to talk about, but probably the most important. Vietnam, Saudi Arabia, India, go country to country and highlight where I see opportunities and try to bring some of these stories to life. But in doing so, what I talk through in the book is the three mega themes that I see reshaping the globe. And the first is really the rise of emerging markets itself. And I think that's a critical theme that we've got to come back to. Second, you won't be surprised to hear me say the rise of sustainability investing. I agree with your comments, Joyce. Sustainable investing was very much mainstream, a hot topic last year. It's had a tougher year this year, but again, I see it as a secular change that's here to stay. And the third and most relevant theme for today is the role of technology in enabling the emerging markets to leapfrog ahead. And there is no better intersection of technology and capital except in the context of digital currencies. I see Mark's getting online.
Hi, everybody.
I'm just going to say a couple more words specifically on digital currencies and maybe walk you through a case example before I turn it over to my co-presenters. I think there's so many incredible, compelling, phenomenal, exciting examples of how digital currencies have been introduced across the planet and how they've been transformational. Some of my favorite examples come from India, where the demonetization strategy has been, like I said, transformational. It's brought identity across the country. It's brought the informal into the formal economy, and it's had vast both social and economic consequences. Brazil is another example that I think has been really innovative in the introduction of digital currencies, and the central banks have been very forward-looking in terms of the adoption of digital currencies. And then maybe I'll spend a few moments talking about another example that I think is particularly illustrative and brings to light some of the examples of, where there's nuance in the cybersecurity space, and that's in Nigeria. Right in the middle of the book, as I'm taking a walk across the globe from east to west, I highlight the sub-Saharan African region and specifically do a spotlight on Nigeria with the question, can crypto save Nigeria? And the section begins in October 2020, where here in the US, we were dealing with Black Lives Matter and the Me Too movement. And in fact, there was a similar event occurring in this more remote part of the globe relative to us here in the US. where there was a group of protesters who were rebelling against a Nigerian army group called the Special Anti-Robbery Squad. And it led to such extreme violence, such extreme brutality that there were protests across the country. The Nigerian government, representing, understanding the power of capital, naturally turned off their bank accounts and cut their access to funding as a result. I think what happened next was amazing. It speaks to other themes that I present later. A group of women got together, formed a group called FEMCO, and ultimately built a source of digital currency to fund the protesters' movements. In my view, when they did this, not only did they transfer money, but they transferred authority on who gets access to wealth and created what I think of as wealth emancipation. It's a promising story and it speaks to the power of digital currencies. I'll give you a couple more examples from Nigeria. One comes from real life. When I was investing capital in Nigeria and experienced significant inflation so high that the country, in fact, introduced capital controls, which is pretty rare in today's very liberalized economy. Any good CFA knows that first and foremost, when we invest capital in an opportunity, whether it's in the emerging markets or developed markets, before we strive for a return, first and foremost, our objective is preservation of capital. And if capital controls are introduced into a country and you can't be confident that you're going to get that capital back, clearly that's a risk that has to be presented. I observed in my investments that when capital controls were introduced and when shopkeepers and companies were cut off from access to international capital, they could use digital currencies as a way to repay debts and to keep the economy moving to whatever extent they could. Third example from Nigeria, and then I promise I'll wrap this up. But another one I find just fascinating. Over the past couple of years, over the pandemic, remittances across the world have increased. You've seen remittance to Asia increase, emerging Europe, Latin America. The one region on earth that hasn't shown the same level of remittances is sub-Saharan Africa. And pretty much all of that is due to the fact that the capital hasn't flown into the banking economy. It's flown through digital currencies, the e-naira. And it's a representation, in my view, of the Nigerians recognizing that they no longer have tolerance for arbitrary rates, the delays, the excessive fees that can sometimes come through the banking system. So what I've talked through speaks to where I see tremendous opportunity for crypto across the emerging markets. Nigeria is just one example. Speaks to the improved security of transferring capital in emerging markets. Speaks to the improved efficiency, the pace that capital can be transferred, which is so exciting and palpable. And it also speaks to the fact that the emerging world in particular, but across the globe, the adoption of these currencies. And we're seeing the adoption of these currencies, especially in the youth dynamic. And across the emerging markets, of course, that demographic is very well represented. So overall, incredible opportunity for emerging market for crypto. But where I see risks or perhaps myths that need to be dispelled is I don't see digital currencies entirely disintermediated from the formal banking system, right? And so there's a couple examples. What do you do when liquidity dries up in a country? What do you do in a time of crisis? Does that liquidity move into the electronic form of currency? And how will the country respond as a result? How will they bring more liquidity into the system? What will the monetary policy be? In terms of the security, I mentioned cybersecurity. In order for the system to be particularly stable and strong, you need a regulatory environment that will support it. So again, it speaks to limited opportunity to fully disintermediate.
Thank you so much for that, Asha. And I'd like to now go to our guest speakers who are online with us and introduce Mark Mobius, founding partner at Mobius Capital Partners, somebody whose work I have followed for so many decades. And really thank you for also being one of the founding sponsors of this event. So Mark, can you talk to us a little bit about how you're seeing fintech, crypto impacting emerging markets? And we've seen that there are nearly 100 CBDCs in research or development stages. Now we've heard about some of the benefits, but we've also seen some of the risks just given the sharp volatility and crash we've had in crypto. So where do you think we are in this cycle? How do you think emerging markets are going to go about adopting this? And how are you seeing the risks versus the opportunities?
Well, when people ask me to talk about crypto, I always like to say, I don't like to talk about religion in public because it is a religious movement in some ways because it's based on the faith that people have in the blockchain system. And as you know, there's no way to track the members of the system. And if something goes wrong, there's no way to get protection. And we've seen this a number of times where without a regulatory framework, without a fallback system, it's a critical problem. Now, the good thing about, as we just heard, the good thing about these crypto systems is that it enables people like people in Nigeria, where there are capital controls, to get money out and into the economy, and to transfer wealth. Sometimes it may be illegal, but nevertheless, they're able to get around this problem of governments restricting the flows of funds. The problem, of course, is that when something goes wrong, when the system does not work, there's no fallback position. There's no regulatory authority that's going to say, oh, wait a minute, we have to claim back what has been lost or whatever. And if you look at some of the blow-ups of the cryptocurrency exchanges, you'll see that not hundreds of millions, but billions of dollars have been lost as a result of these blow-ups. So this is one of the big challenges. So on one side, I'm very much in favor of the ability of people to move money around the world without going through banks or the regulatory authorities. But on the other hand, it's a very risky business for people who are doing that, and they have to be very, very sure about what they're doing and how they're doing it. The other aspect of this crypto world is that, as you know, central banks around the world are trying to restrict or at least regulate money supply. And we've seen this incredible increase in money supply, which now is causing the inflation that we're witnessing around the world. The problem is that now, or maybe the opportunity is that with the creation of crypto, there is no way to know what is the money supply. And there's no way for central banks to regulate the money supply. This might be considered a good thing because the money supply power of the central banks has created a real problem in that they've pumped up the money supply to such extent that the currency has devalued. The question now is how big is cryptocurrencies out there, and how will central banks, if they want to, contain the size of the money, the size of money supply, and by that way, somehow contain the devaluation of the currency. So we're seeing, and we're seeing right now with this tremendous money supply increase that we had, a big increase in inflation, which is probably underestimated because the money supply was up 40% and inflation is only 8%. It should be much higher than that. And of course, central banks are trying to raise interest rates because they believe that by raising interest rates above the so-called inflation rate as measured by the CPI, they'll be able to contain inflation. The only thing that will contain inflation is, as I pointed out in my book, is productivity, technology. So we're in a very interesting position globally because I personally feel that the impact of cryptocurrencies is very big, a lot bigger than people realize, and that it will be probably impossible for central banks to restrain this money supply and cut down on the inflation. So in sum, I think the idea of crypto is quite revolutionary, and of course, it's had a big impact. But the question now is, how do we introduce it in a way, or introduce the system in a way that is safe for people to operate? And I think it's important to differentiate between crypto and digital money, because we're all using digital money in the sense that when I'm shopping anywhere in the world, even here in South Africa where I am, I'm using Apple Pay, which is a form of digital currency in the sense that I'm using digits to pay. So that's something entirely different from crypto. And I think we have to make sure we differentiate these differences. Thanks very much.
Thank you so much, Mark, for those comments. And I think, you make so many comments that I would just reinforce that, we need to separate crypto from the application and the technology. I mean, the technology is here to stay. And, we all went digital. I mean, basically, if you didn't go digital, you weren't in business. So that sort of happened, overnight. But I think Mark brings up some really good points. How are central banks going to regulate this? How are regulators going to look at this? We have more than 10,000 crypto coins. And even when we talk about all of the benefits of crypto adoption on financial inclusion, speed, efficiency, there is also a very high correlation between corruption, high inflation, and high capital controls and adoption of crypto. There's a very strong correlation. So this remains, a very challenging environment, which we can get to in the Q&A period. But I'd like to come to our final panelist, Marcos Troyjo, the president at the New Development Bank, to share his thoughts on where we are right now in this whole journey of fintech and new directions in the financial sector and CBDCs. Over to you, Marco.
Thank you very much, Joyce. Great to join the panel. I want to say hi to Asha and also to Mark. I also want to say hello to my great friend, Professor Lourdes Casanova at Cornell University. Joyce, I wanted to look at things from an angle that is perhaps a little bit more structural, and that I think at the end of the day affects the very core of new directions for the financial sector, which has to do with this eclipse that's taking place in the global economy as we speak. I have just returned from the fall meetings of the International Monetary Fund and the World Bank in Washington. And when we look at the relative distribution of the global GDP pie, and we see the sources of economic growth going forward, it seems to me that once again, there is something that is much more structural taking place than just the impacts of this or that particular technology on the generation of wealth or on the definition of direction for global finance. And as I see it, Joyce, the single most important change that we can see out there is the fact that even in a tough year like 2022, very difficult year like 2022, when we size up the GDP measured at what economists call purchasing power parity of the so-called G7, right? The G7, they've been meeting from the 1970s all the way to today. There's a G7 meeting taking place today as we speak. So once again, the US, Japan, Germany, the UK, France, Italy, and Canada. According to the latest projections of the IMF, these 7 countries will have a combined GDP measured at purchasing power parity terms of $49 trillion, right? So that's G7 GDP, PPP 2022. Now, if we take into account those countries that constitute the object of the studies of this great unit that's led by Professor Lourdes Casanova, the emerging markets, and what I like to call the E7, the biggest 7 emerging economies of the world. So China, India, Brazil, Indonesia, Russia, Mexico, and Turkey. They will have in 2022 a combined GDP measured at PPP terms of about $60 trillion. So today, the biggest emerging economy, the 7 biggest emerging economies of the world are already about 20% bigger than the so-called G7. So that creates a whole set of new realities that different sectors have to cope with, including the financial sector, because it is true that the geoeconomic meridian of the world is more and more being transferred over to those countries with big territories, big populations, and robust economic growth. For example, back in Washington this last couple of weeks, there was an omnipresent talk about global recession, right? And that's probably a reality that one is going to see in Europe, one that's probably going to see in the United States. But China, with all of the punctual problems that arise from the COVID-0 policy that the country adopts, is going to grow at around 3% this year and north of 4% next year. Probably we're looking at a stabilized rate of growth of 4% a year every year within the next decade. You look at India. India is going to grow at around 7%. You know, mathematicians have told us a magic trick called the rule of 70. So you want to determine how long it will take for an economy to double its income per capita based upon the rate of economic growth every year. So what you do is you divide 70 by 7, which is the actual expansion, economic expansion in China, in India this year. So it's going to take India about 10 years to double its income per capita. You look at countries like Brazil. Brazil is going to grow at around 3%. Indonesia, with 280 million people, is going to grow in between 4.5, 5.5%. Egypt, which has now become Africa's #1 economy in GDP measured at PPP, growth at around 5%. So there is still robust economic growth happening in emerging economies that will only push this structural trend forward. And why do I say this? Because as one looks at the picture, one talks more and more about the reconfiguration of global supply chains as a reality that's arising from geopolitical tensions. But I like to see that, Joyce, as something that is much more comprehensive, much broader than just supply chains. Not only are we reconfiguring supply chains, but we are reconfiguring whole value networks, including those areas that have to do with innovation affecting the financial sector. I think it's already been mentioned here, the amount of e-pay and cashless transactions that take place in China. We have talked about the frugal innovations involving e-pay in India. We talk about how much the so-called PIX payment system is widespread in Brazil. So what I think we should expect going forward is not only, say, a redirection of supply chains resulting from geopolitical tensions, but something, as I said, much more structural that has to do with the epicenter of the global economy moving towards emerging markets. And of course, much of the innovations that we will see will come from emerging markets as well. This is also true about the overall flows of capital, the overall flows of investment. You know, we're just fresh from the second round of presidential elections in Brazil. And when I look at the past, whenever there was an electoral year in Brazil, the economic themes of this or that particular candidate would go to Washington, would go to New York to get advice, to make sure that all of the financial channels were open and flowing. But the world has changed in such a dramatic manner. The directions for the financial sector are now in the Middle East, are now in East Asia. So the very sources of liquidity, the very sources of finance and innovation have moved elsewhere. Of course, the G7 the OECD countries, the mature economies of the world remain extremely important, but there are new actors out there. There are new kids on the block in terms of emerging market relative economic might. And this will very much reflect on how innovation in the financial sector comes about within this next couple of decades. Thank you.
Thank you so much, Marcos, for that. And maybe a good moment where we can open it up for more questions in the audience as well. And I did want to just though say that some of the things we are concerned about just in emerging markets over the near term is that particularly in the frontier markets, I mean, we track about 50 frontier markets, and we do think that 24 of them will have some real repayments problems in 2023, 2024, and that 8 of them could actually face reserve depletion. So there's really kind of 4 different emerging markets right now. There's China, there's the EM middle income, there's the frontier markets, and then there's sort of the Middle East commodity exporters, and we have been concerned that both on debt and food security, some of the frontier markets look quite vulnerable right now. So a lot to talk about on emerging markets, the supply chain, where we are with Fintech and CBDC. So perhaps I can open it up for questions. Okay, sorry, it's just a little hard. The questions, how do you think we could prevent and regulate speculation in the cryptocurrency markets? Is there such a thing as a true stable coin? And how do we think about valuing crypto? Isn't it speculative by nature? So those are the 3 questions that have come in. And so can I ask our panelists, if they want to do, and they're all on crypto here, and so maybe I can try to move a little bit so I can see the questions. Pardon me. Just going to try to see if I can sort of move somewhere where I can see the questions a little more clearly. The other questions, how do you think we could measure the impact of cryptos in the markets and especially in emerging markets? All of the questions here on crypto, on valuations, how we look at stable coins versus, within like CBDCs and the whole universe of crypto, and how do we think about measuring the impact of cryptos in the markets, especially in emerging markets? So Marcos, Mark, Asha, any of you want to start with that, and I can chime in some of my thoughts as well.
Well, first of all, this is Mark. I think these are great questions, and they really get to the heart of what we're talking about here. I don't remember every single one of those questions, but I think I have the general idea. I mean, first of all, valuation of crypto, it's really impossible to do that simply because these the crypto currencies are created, and they're not linked to any currency that we know that are controlled by central banks around the world, except for those that are linked to the US dollar or some other currency, but few of those exist. Most of the cryptocurrencies like Bitcoin are not linked to any other currency. So you don't have a sort of currency board environment. So the answer to that question is there's no way to value. It's purely based on what other people think the currencies are worth and what they're willing to pay in US dollars or some other currency issued by central banks. The other question on regulation should be answered by another question: is why would you want to regulate cryptocurrencies? Because one of the values of the cryptocurrencies is that they are not regulated by any central bank or any government. In fact, that's one of the reasons why they were created in the first place. And the benefit of being able to transfer value, for example, from Nigeria to the US or some other place without the government intervention is really the value of these crypto currencies. And when it comes to the regulatory framework, probably the only answer to that are the crypto exchanges, where people exchange their crypto for dollars or other currencies that they can use in countries that are where currencies are issued by central banks. So we probably will have to look at these cryptocurrency exchanges, which hopefully can be regulated in some way to ensure that they don't go bankrupt or don't get into trouble, which they have done, as you know, in the recent past. So great questions, and we need to have answers going forward. That's for sure.
Asha, you have some thoughts on this range of questions that's been coming in, really on regulation, and if this is going to come to scale, there's going to have to be some regulation around it that offers protection to the consumers.
Joyce, I think you framed it just right. I have thoughts on the range of questions, and there are sort of a few areas we could talk about them. One is in the context of regulation. One is in the context of, what does it mean to be a cryptocurrency in the emerging markets? I think both of those are emerging market specific questions. In terms of the valuation and how do we think about cryptocurrencies, I actually think that is a question that extends beyond emerging markets. It's a global question, and perhaps Joyce, some of your comments, your thoughts, with running global research at JP Morgan would be relevant in that global context in particular. But I wanted to come back to the regulatory point. I agree very strongly that an unregulated currency offers tremendous opportunity. As I talked about with my opening remarks, this idea that it gives you an alternative source of accessing capital when capital controls have been in place, or when the fees to address capital simply are just not reasonable and therefore not pragmatic. But ultimately, and just to sort of reinforce many of the points that many of us on the panel have raised, I don't necessarily see a world where cryptocurrency becomes a mainstream form of currency, especially in the emerging markets, without some intersection with the regulatory environment. That for cryptocurrencies and alternative digital currencies to have a sufficient liquidity to be a stable source of currency, there needs to be some reserve in the system. There needs to be some intersection with monetary policy. There need to be systems to ensure that cybersecurity exists, that the identities can be protected. I'll reinforce Joyce's comments at the opening remarks, but where you see higher cryptocurrency levels, you often do see higher levels of corruption. And so without having some regulatory framework in place, that creates a risk. Coming back to the idea around cryptocurrency and the other idea on cryptocurrencies in emerging markets, I want to reinforce Mark's point that there's almost a fine line between cryptocurrencies and digital currencies. And so when I think about how do we value digital currencies in the emerging markets, one theme that I find just so exciting, and again, it's palpable here in the US, there's a lot of innovation in the fintech sector. There are a lot of private companies, venture stage capitals in emerging markets that are offering these interesting solutions that bring efficiency and bring economic benefits as well as financial inclusion and the social benefits. But I'm seeing the adoption of these technologies not only from the private equity asset class or venture capital asset class, and not only in small caps and micro caps that have sort of an innovation center embedded within them, but actually across the cap spectrum. Some of the largest banks across the emerging markets have adopted digital currencies, and that's of course true here in the US and across the developed markets as well. So I wanted to make that point that actually you can value digital currencies in part by looking at the financial system wholly within a country. So I'll pause there and
let me just see if and I can add some comments at the end. But if Marcos, if you have some comments that you'd also like to add to this discussion.
Yes, Joyce. What I like sometimes to ask myself is, what would John Maynard Keynes say about crypto and other kinds of currencies that we're talking about if he were alive today? So probably what Keynes would say was that, well, we have a challenge in terms of governance. We have a challenge in terms of governance because we're talking about a phenomenon that is global in scale and that is unregulated globally as well. So I think it will come a time, and I'm not sure whether this is going to be a pre-crisis or a post-crisis effort. But whenever problems will arise, I think the tendency here will be that people will turn to the established monetary authorities. And the likely answer will be, well, we are not prepared to deal with these problems because we were not on top of the subject from the very beginning. So it seems to me that globally there is a kind of deficit of cooperation in so many issues, and there is a deficit of cooperation in, say, creating the necessary boundaries for governance in crypto as it exists in other areas of monetary importance. So once again, I believe there is a sort of divorce between reality on the ground and what regulating authorities have been able to accomplish so far. But this distance will be made shorter as this becomes more widespread, even in emerging markets. And there will come a time for different players to come up with a global compact involving crypto. There will be at one particular point the need for establishing the parameters for crypto, and hopefully this will be something that is a little more preventive than corrective. But I think this is still a question out there in the open.
Yeah, no, thank you so much, Marco. So perhaps I can just add some of JP Morgan's thoughts. So let me start with the first question on valuation. And I think this is very hard to answer, as Mark Mobius pointed out, but this is one framework we use. We basically look at what is the cost of production of crypto. So the lowest cost producer for crypto has often been a China miner. So that lowest cost of production, is sort of, anywhere from, the estimates are, sort of 13 to 18,000. So that's sort of your rock bottom. What's the cost of production? And then we actually look at adoption. We look at, if you had, crypto was as accepted as gold, what's the potential for what the adoption could be? But I find that a little bit spurious. I have to be, very honest in sort of saying that, but that's sort of a hypothetical. But my own view is that you're going to have to see much better use cases than what we've seen. And that's probably a 5 to 15-year process. It's not a 1-year process. So everybody talks about crypto, but that's just one application of the technology. And so I think that you need better use cases, but let's, try to address sort of the stable coin question, a bit more. So I think the first question I get is what caused such a sharp crash in this? And you've got a very deep structural flaw in crypto that's been evident, for some time. And part of this was that, you really began to see crypto come down when tech came down last November. It accelerated this year, and the Terra collapse has been the main cause of the crypto winter since May. But what you actually saw was in the correction phase of the crypto markets, it started about a year ago from November with really the correlation between cryptocurrencies and tech stocks, which went to very high historical levels. And so as the NASDAQ declined, so did crypto. So those diversification benefits really came into question. But let's talk about stable coins. So the prevalence of stable coins really does show the search for a nominal anchor and the need to piggyback on the credibility of a central bank. But you've had the collapse of Terra, and nobody can actually tell you, going to Mark's points about the crypto exchanges, how they could prevent this from happening again. And you wiped out $60 billion in the space very quickly. And that shows really the imperfect nature of this nominal anchor. And so I think that what you will see is that regulators will probably look at stable coins much more like a narrow bank. And that with some of the same functions as a narrow bank, and therefore they're going to have to be similarly regulated. Now that could, take a while to be forthcoming, in my opinion. But but if you look at the stable coins are, still a very large part of the crypto market cap at around 20% or so. So I think we've gotten to the questions. There's a few more questions, and we're almost out of time. Is there any use of the NFTs in the enterprise. So we've kind of talked crypto and stable coins. So let's just talk about like some of the other questions coming through and do a very last quick round. NFTs, if anyone wants to take that one, or maybe people will pass. How to make crypto sustainable from the point of view of energy consumption. It's another question. And then there is a whole question of what are you going to expect in terms of just the overall macro forecasts, growth, inflation, sort of, and what that means for emerging markets. And I think, maybe in that round of questions, let me just see if I can get a final comment from each Asha, Mark, and Marcos.
Perfect. I'll try to keep this brief. Would love to comment on the last question on outlook for emerging markets, and I'll likely repeat some of the comments that Marcos made previously, but I couldn't agree more that emerging markets in pretty much every context except asset allocations are mainstream. Marcos talked through the economic power of the E7, as he named it. The reality is, if you look at the G20, the bulk of the countries are emerging market countries. As he said, the bulk of the globe's GDP is emerging markets driven. The bulk of the globe's GDP growth comes from emerging markets. The only area where you don't see the representation of emerging markets is in asset allocations. My view is that in this environment of record high inflation in the developed markets that hasn't been seen in a generation, where growth is slowing and investors are hungry for growth, the emerging markets with the innovations that we've talked about are showing the growth opportunities that global investors may be looking for. There's been a generation of education and technology development that's been built into the emerging markets, and these are economies that are roaring. Put on top of that, the fact that emerging markets are trading at a 2-decade low relative to developed markets peers. And my view is emerging markets today are becoming a contrarian's favorite.
So a contrarian's favorite. Mark, some closing comments and thoughts from you on these questions, and then I'll come to Marcos next.
Yeah, I think the non-fungible tokens do have a role in identifying various articles. I know it's been used in the art world and so forth. And yes, it can be used as sort of a identifier and a protection of ownership and that sort of thing. So it definitely has a role. In terms of the central bank using the coins, or rather central banks using cryptocurrencies, yes, I know many of these banks have been talking about it. Of course, the central bank in China is talking about it, but the fear of that kind of development on the part of people who've been using cryptocurrencies is that the governments will then be able to identify who is having these cryptocurrencies, who's transferring them, and it could turn into a form of government control, which is exactly what we don't want to happen, because the whole idea of the crypto world was to get away from the government controls and provide a smooth way of operating. So that's something that we have to consider very carefully. And finally, I would say that we are really in a new world. Let's put it that way. With the introduction of cryptocurrencies, it's quite a revolutionary change that's taking place, and it speaks for the revolution that young people are now engaging in against government control. It's very, very interesting political aspect of this whole thing, and we'll just have to see how it turns out. Interestingly enough, most governments have not moved into trying to control these cryptocurrencies, which is quite amazing in some ways, but let's see what happens going forward. Thank you.
Marcos, some final thoughts from you. Thank you so much, Mark. Marcos, some final thoughts from you.
Yeah, no, Joyce, I just wanted to highlight this interesting, how can we call it, disconnect between, on the one hand, the financial complexities that one sees in mature markets and traditional financial markets in the US and Europe. And on the other hand, this growing importance in terms of scale and in terms of spotting the engines of economic growth that you see more and more in emerging markets. Yeah, so markets like the US or the UK, very complex. But on the other hand, if you look, for example, at China-Brazil trade back 20 years, it was $1 billion a year, whereas today it is $1 billion every 60 hours. So I think at one particular time, this great disconnect, the two elements of the disconnect will add closer and closer. And this will be very interesting to watch, because the emerging market world has also some very important frugal innovations that might be, say, made to the use of even increasing, enhancing the relevance of emerging markets as a relative weight in the global GDP pie.
No, thank you so much, Marcos, Mark, and Asha, for your comments. And just in quick summary, so, the potential for emerging markets and actually the more attractive valuations and even more powerful argument. And I would just put out a thought that, with the dollar up 20%, that dollar strength could still persist for another 3 to 6 months, but over the next decade, I would look at dollar depreciation of 3%. You're starting to see very attractive valuations in some of the emerging markets local. But crypto, something where until we get the regulatory environment, sort of in a better place, the institutionalization and adoption is going to be harder, even though the momentum and growth and demand is not going to stop. So there's going to be always that conflict between innovation and how we ensure financial stability and oversight. And also, as Mark very much points out, this whole issue of identification and accountability and traceability. So much to continue to talk about in this discussion. Thank you to all of the panelists for joining us today online, and also to Asha in person.
Thank you.